Thank you for joining this webinar. My name is Frank Musica, and I will be taking the next 30 minutes or so to look at some of the numbers construction-related design firms can use to compare their performance and risk against other similar firms. We will be looking at the levels of professional liability insurance coverage firms carry, both the limits and their self-insured retentions or deductible obligations, at those who bring claims against design firms, and we will look at some of the project types that can cause exposure issues. All the information that we'll be showing to you is available on our website. That's victorinsurance.com/school-of-risk-management, and it has a lot more statistical information. So as you are looking at your present condition and thinking about your preferred future, check the website information for data that can be helpful to you in the planning process. With that, we will go on to from risk to profit, benchmarking your claims experience. Now, first, let's define what we mean by benchmarking. Over the many decades that the Victor program has, with CNA has been in operation, we have tried to share claims information with policyholders to help them make informed business decisions. We had a pilot program with the University of Maryland to analyze what products and systems were implicated in claims. That no longer is in existence because it became far too complex in the claims handling process. We have issued many analyses on when claims are brought and by whom, often as a way to help state trade associations and professional societies lobby for specific protections. And we publish on our website a lot of data. All of this will help you and actually helps us in the underwriting and pricing of coverage, but it will help you understand claims. When the program got us started in the mid-1950s as the commended program of both the American Institute of Architects and the National Society of Professional Engineers, one of the basic components of the program was data collection for both actuaries and firms to look at what has happened and to project what would be occurring in the near future. It actually is interesting that many of our competitors hop into and out of the market depending on financial factors and do not have a strong database or in many cases any way of basing the cost of insurance on the realities of claims. They really look at it as long as we collect more money than we have to pay out, we're fine. I know one of our competitors that got started in the 1970s got bought out so many times, and with each buyout, the new owners simply abandoned information on past performance of that program. We know that while past performance is not always an indication of future performance, we think it is vital to know what has happened with claims over the years to detect trends and new challenges. So today, we want you to look at the claims data because it really can be turned into knowledge, and the knowledge can be used by your firms to evaluate your performance, make your own business decisions, and improve your practice. And again, we've had over 60 years of experience. We handle about 4,000 claims per year for our policyholders, and we're the only one that has that kind of information. Now, I mentioned that our website has more information. It is updated regularly, although you will see with some of the information on the slides today, it's not an instantaneous process since claims often have to be developed, and if you look too early at their cost, that can be deceptive. But we think the information is valuable to us and to you. We develop practice management guidance for firms. You can develop your business plan and target markets for future opportunities. And the information we're presenting can help you manage claims frequency and severity. You can look at limits of professional liability insurance policies, against your peers. You can analyze your own loss experience, and you can look at a little bit about the type of claims and associated costs made by project types. Again, evaluating exposures is basic to your business practice. So please look at the information today. We can't provide you with all the information we would like for competitive purposes, but we will provide you with information that I think can be helpful. Okay, let's look at the information. First, you need to understand the terminology. Frequency. When we refer to frequency, we're talking about claims that are reported to CNA, that are reported as demands by clients or others for money or services, and that are based on your practice in the profession, that are based on your negligence in performing your services. When we talk about severity, we can't look at the underlying deductible or self-insured retention. We look at the CNA dollars spent. Deductibles vary a great deal, so figuring them into severity is a difficult matter and really can be deceptive. So we look at the CNA dollars that were spent. We'll refer to firms as smaller or larger. And the cutoff we're using today is 5 million in annual billings. So if you have annual billings of 5 million and below, think of yourself as a smaller firm. If you have annual billings of more than $5 million a year, think of yourself as a larger firm. Now, let's look first at professional liability limits carried by firms and their deductible obligations or self-insured retention. Here's a view for architects. I should note that in the past decade or so, the amount of coverage firms carry has increased. Part of this might be the complexity of projects or the desire to protect their assets, but another reason is marketing. And during the Great Recession, many larger firms started doing smaller projects. And when times were good, they never would go after because they had to avoid them because of their overhead costs would keep smaller projects from being profitable. But during the recession, larger firms wanted to do any projects they could. And one of their marketing tactics was to go to prospective clients, both public and private, and use the argument that unlike the larger firms that carry much higher insurance limits, smaller firms were underinsured, so the client should demand higher limits. The underinsured argument was fallacious, since average claims rarely approach the limits carried by smaller firms. We'll show you average claim costs later on in the program. But the larger firms market their coverage to the clients, and the clients raise their demands, thus basically eliminating smaller firms from competing with the larger firms for the projects. And those higher demands from clients remain. Now, if you look at this for architects, you can see that right now, close to 50% of all the architecture firms we insure carry a limit of $1,000. That's $1 million. That's $1 million per claim limit. You can have differing limits for your aggregate liability, but in general, think of the per claim limit of $1 million is about what half of the smaller architecture firms will carry. Larger architecture firms carry about $5 million in coverage. If you look at the deductible, one way to look at it is what is the percentage of deductible or self-insured retention that firms have compared to their gross billings. As you know, the higher your deductible, the lower your insurance costs, since a higher deductible means you are internalizing more of the exposure. But insurance companies don't want firms to have high deductibles unless they also have liquid assets to cover their obligations to pay for their retained risk. So if you look at this, most recently, smaller firms, smaller architecture firms have deductibles are about 0.9% of their annual billings. Larger firms have even less than that, about 0.5% of their annual billings. It's often seen as you really should have a deductible that maybe is 1% of your annual billings. Here's a similar information for engineering firms. There's not much difference from the limits carried by architects. Again, in this case, 50%, slightly more than 50% of smaller firms have a $1 million per claim limit. And 45% or so of engineering firms carry the $5 million limit. And for engineers, if you look at percentage of gross billings, again, quite similar to architects. Smaller engineering firms have about 1% of their gross billings is what they look at as a deductible or self-insured retention. Larger firms are about half of percent as a deductible. Again, it depends how much risk you want to carry. Some larger firms will carry enormous amounts of risk themselves because they've set aside money and they have ways of handling those claims and keeping them from becoming claims that might drive insurance costs. Okay, let's look at frequency and severity. Again, frequency is a number of claims that are reported to our program, demands for money or services based on your negligence and your performance professional services. And severity of claims is the amount of money the insurance company pays. Here's the information from the very beginning of the Victor program with CNA. I want to track through some of the history to show you the influences that affect claims. Note that huge jump in claims in the late 1970s and early 1980s. I was in practice back then, and there's some interesting reasons behind that. One was inflation. One was concerns over energy efficiency, and one was merely greed. When inflation is high, and remember that it hit almost 20% on construction loans in 1981, that means that every project had to be designed quickly and built on a very tight schedule. And that caused problems. Construction was often shoddy, and if anything had to be rebuilt, the costs because of inflation were much higher. In fact, one might look at that Florida collapse and realize that that building was built during this time of very fast construction, often fast-track construction, and often without the real quality that is compromised when you're building something fast. Note also that after the oil embargo in the 70s, the federal government started the Building Energy Performance Standards, and many states put in place restrictions on energy use. They were hard to meet because of missing design expertise, systems that were not focused on efficiency, and contractors who neither knew or cared about what they were doing. So claims happened because energy constraints were not met. You also might remember the Michael Douglas movie Wall Street that was in the early 1980s. As Gordon Gekko, he stated that greed is good. Greed is what drives American business. And indeed, that was a mantra of business back in the Reagan years. We wanted the quickest profits possible. And that caused claims. Before, say, 1970, claims were relatively stable. Firms often looked at insurance as the thing to stand behind them. They didn't worry too much about their own risk management. When claims started skyrocketing in the late 70s and in the 80s, topping out in 1982, firms all of a sudden realized that they had to be more careful. They had to be careful in their contracts. They had to be careful in their procedures. They had to communicate more. They had to really had quality control and quality assurance programs. And that helped to bring down claims, as of course did a reduction in inflation. So materials costs were more easily recognized. And that became stabilized. One thing that was interesting is a lot of insurance companies jumped into the market when claims were high, because that meant rates were high. It was difficult for actuaries to even think about what to charge for insurance because rates kept climbing. In fact, the CNA program put in a protection for policyholders where it said if the money was not used for claims after a certain profit margin, that money would be paid back. And in the 1990s, many millions of dollars in interest was paid back to our policyholders. You can see other bumps in this. During the Great Recession, following 2008, you don't see a huge increase in claims. That's because what we're looking at here is the frequency of claims per 100 firms. The frequency of claims per 100 firms did not go up, but the frequency of claims per dollar billings went up significantly after 2008. Firms weren't getting as many projects. Claims were still coming in. Claims per number of firms did not rise significantly, but claims per dollar of billings did. And you can see in recent years it's going up again. And it's going up for some of the same reasons. We're going to hit inflation again. That will make projects have to be built more quickly. The cost of remedial work would go up. There will be claims because of that. But many of the claims now are really based on the complexity of projects. Here's in the last few years what the frequency is. You can see the difference between architects and engineers. And again, if you're a very large engineering firm or architecture firm, you're doing a lot of projects, you're going to get a much higher frequency of claims than a small firm. If you're a firm with billings of less than $1 million, you might have a claim every 5 years. If you're a large firm, you may have 40 claims a year. And let's look at where they come from. Almost all claims come from stakeholders on a project. Looking at this 10-year period, most claims are brought by owners. Now, those of you who listen to our past webinars know about the Spearman doctrine that says owners have a greater duty to contractors than design firms have to owners. And that means that many claims are brought by contractors against owners. They are passed through to the design professional. So when you see the about 62% of claims from owners, many of them are flow through claims from contractors. But think about this, the stakeholders in the project, owners and contractors, are the ones who bring most claims, and in fact are the ones for whom most payments are made, to whom most payments are made. So if you can communicate properly, provide a scope of services that's adequate, and document your project properly, you can reduce your risk. Now, some firms worry about bodily injury claims. They think they're victimized by bodily injury claims. And there are bodily injury claims that constitute about 12% of all claims. But few claims payments are made in relation to those claims. They're probably in the course of a year, maybe 4% of all money paid by the insurance company for claims against design professionals are related to bodily injury some of them are going to be injured worker claims. They bring claims anytime they can because worker compensation benefits are so low. So they do what's called an action over workers' comp. They'll sue any design professional who could be involved. But again, those don't result in huge payments. Remember, we discussed the limits carried by firms. Here's what the average is for claims. Now, note, we capped this at the first $1 million of harm because that way unusual claims with high costs won't skew the average. So when your firm with billings of $5 million or less, a smaller firm, has a client asking you to carry $10 million in insurance, you can point out that the average paid claim by your insurance is less than $150,000. And that's, of course, above your self-insured retention or deductible, but it's still a minor amount compared to the cost of the average project. So rarely will claims approach anywhere near the per claim limit that firms carry. Here's another way to look at the stats, looking at architects and engineers. And again, it's less than $150,000 per claim right now. The other factor that you and your client should understand is not every claim results in a payment by you or by your insurer. Here's a percentage of all claims that result in the CNA program paying on behalf of a policyholder for a cost, loss, or damage caused by the negligently performed services of the policyholder. If you look for smaller firms, only slightly more than 20% end up with an insurance payment, an indemnity payment. That's a payment by the insurance company on your behalf to solve the problem. And when you're talking about large firms, it's less than 10%. Now, some claims take defense costs and only defense costs. Here's the numbers for that. The average for closed with no indemnity and defense over a 10-year period is something you also have to look at. I won't show you a chart on that. But if you add the number of claims with defense-only payments and the number of claims that have defense and indemnity payments above the deductible, there are still a lot of claims that just go away, that don't result in payments by your insurance company for defense costs or for indemnity. And for smaller firms over a 10-year period, I think it's 42.4% of all claims do not end up with an insurance company payment. For larger firms, that's almost 60%, 57.7% over a 10-year period. In 2019, claims closed with no payment made by insurance company, almost 43% of small firm claims, over 60% of large firm claims. Now, they, of course, cost you time and money, but they don't drive up your insurance rates. Okay, let's look very quickly at just some project types. The most meaningful information for you is information we cannot release. What firms should want to know is how does the percentage of reported billings for a project type compare to the percentage of claim payment? We don't provide that information because competitors would use it to determine internal rating and other confidential information. But one quick example, if you look at this, you can see that while condos may account for 15% of all claims, they account for about 28% of the cost of claims. Now, that provides you some information that claims from condos will cost more. But what you really need to know, and I'll release this information, is if we compare the billings reported by firms and the percentage of all the billings that firms say they get from condos, and we look at the percentage of all claims payment we make on condo projects, it's about a 4-to-1 ratio. We pay over, the percentage of paid claims is over 4 times what the percentage of reported billings is, which is why condos are seen as a terrible project type. Now, if firms obviously charged a lot more for their services, that ratio would go down. But we cannot right now charge firms that do condos enough money to pay those claims. You just can't raise those rates high enough to pay off the claims, so they're being really subsidized across the board. Now, note, not every condo project is the same. We have some policyholders who do condos for good clients who never get claims against them. Engineers, typical engineering things, maybe a lot of claims on houses and townhouses, but the cost of those claims is not that high. With schools and colleges, mostly because of labs and other things like that, the cost of solving a claim could go up quite a bit more than what the percentage of frequency is. Schools and colleges, just look at those. You can see over the years what happens. Some years, and again, it depends on how much is being built, what type is being built. The severity can be higher than the frequency. But again, you really have to look at the type of project you're doing for a college or a university, and that will vary a great deal. Healthcare is another example where it can jump around a lot depending on what's being built, how complex the building is, because obviously if there's a major problem in a complex structure, it costs more to fix. And commercial projects, the same way. Looking at frequency and severity, it's very difficult to get a handle on how overall those projects compare, because there's so much of it is based on the individual type of projects. Now, with that, we'll talk about some of the risks. Obviously, the more you look at the information on their website, the more you'll be able to identify the kind of risks for the project type you're doing. We have it broken down by area of the country, so you can look at geographic location. Obviously, if you're doing condos in any coastal area, there's going to be more water intrusion problems than there would be in other parts of the country. You can look at your scope of services and see, what you're getting paid to do on that project. And we would like you to have a full and extensive scope of services so you can manage projects better. Looking at the schedule, again, that's what drove costs, claims and claims costs in that lump in the late 70s, early 80s. As we get into schedule demands again, and we may be doing that in the near future, that can generate more claims. And construction complexity, especially at a time when construction companies are shorthanded, where they're no longer can just throw people at a project and are having a difficult time dealing with some of the complexities of the projects they're working on. So construction complexity could result in more claims against you as projects have problems, often because of contractor issues. And let's talk a little bit about, once you identify the risk, what do you do with contracts? Is there a clear scope of service? And does your agreement fairly allocate risks, or risks assigned to the entity in the best position to manage those risks? I'm working, in fact, this week with the AIA Documents Committee. And every time we look at a document, we try to figure out, is that architect in the best position to manage that risk? Who else could handle that risk better? Is that something that should stay with the owner? And if you don't assign authority along with risk, a contract can create a terrible problem. You can't carry out your duties assigned by that contract. So please be careful with your contracts as well. And what you're looking at on the screen now is a homepage for our School of Risk Management. The tools and resources are where you'll find the information on benchmarking by project type, by area of the country, and all that. By the way, the far left tile is where you can find our contract sifter, where you can sign up and actually sift each contract, where we'll identify some major issues in contracts. It's an issue spotter for firms. And that continuing education are the courses we have that are able to provide continuing education credits for you. Under the news and events will be programs like this one in the future that cannot provide continuing education credits, but can provide information. So please look at the website, make sure you're signed up for it. You can sign up for the contract sifter, you can sign up for the continuing education programs, and you can look at the tools and resources for benchmarking information and other practice management information. Now, with that, I'm going to leave you. Please make sure that you fill out the survey, provide us with your comments, and I thank you for listening, and that's it for today's webinar. I hope you will sign up for our future program.